So it's always important, whatever you do, we always talk about a top five, we always talk about the real estate between your ears and getting educated. And sometimes things that are right in front of us, you gotta take a little bit of a deeper look. We're gonna talk a little bit about today. I'm Rob Gill, founder, CEO of Epic Financial Strategies. The hidden dangers of banking. I'm not trying to say like, oh my God, it's dangerous, but awareness is the key. So let me just kind of take you through this a little bit. Banking instability, it's a real thing, especially as you climb the wall of financial freedom and success. Over 560 banks have gone out of business since 2001. That's a little scary, including some serious players like Lehman Brothers. Now, in the information age, however, there are new dangers to the banks that have never existed before. We know that FDIC gives us protection and insurance up to $250,000 in the account. However, when it comes to understanding exactly how to put those monies in different accounts to give you that protection from the things that you can't control, you want to always be able to get educated on that. Now, let's talk a little bit about loss of agency and what that looks like. There's just some of the reasons why using a savings account to build wealth can possibly be a dangerous idea for you and your money time freedom. The loss of value through inflation. So what is inflation? Inflation means that your money is worth less. And if inflation gets higher economically at any given point in time, what will begin to happen is the value of that money gets dropped as well. You also have withdrawal restrictions. So let's say if you had a CD, 1 year, 2 year CD, you may get penalized. Even if you get a better rate, you may get penalized by taking it out too soon. So you always want to be able to understand that. Changes in the regulatory system is always happening. It's like waves in the ocean. It just keeps coming and never stops. Last but not least, there's going to be not only the potential bank run on a collapse, and what that means is this. Let's say if some economic news comes and everybody wants to take their money out of the bank at the same time, that's where the FDIC insurance is important, because you want to make sure if that happens, you got that protection up to that $250,000. And let's not forget about the cyber attacks, cryptocurrency, and all the other things that are out there right now. Because of these cyber attacks, these are hidden dangers coming in ways that we've never seen before. And by the way, it's getting faster and easier for them to come in and take money or do things to credits or be able to steal identities in a way that we've never seen before. All right, so let's get into like this year specifically. Although there's been some collapses, I'm not saying that it's 2008-9 again, right? But I'm not saying it because I don't know what's going to happen a year or two down the road. I don't think any of us really know unless we're in that hidden circle where all the decisions get made. But with that being said, the bank trolls. Several mid-level banks like PacWest, Silicon Valley Bank have been subjected to cyber attacks and artificial short selling. That's important, folks, in order to steal from their customers and tank the value of their stock. No bank is 100% safe from these kind of attacks. So, I mean, what does that mean? What are the alternatives? What are the other strategies that we could do in order to put our money into a place where, I'm not saying it's going to protect us from a bank failure because there's risk in other investments as well, but also we want to be able to know, okay, what are these other investments that we can look at? So let's get into, okay, there is money in the bank. I have money in the bank. You should have money in the bank. But what are some of the alternative strategies as well? Well, we know about stocks, right? You own a piece of a publicly traded company. We know about bonds. You give money in the form of a loan to a company that pays you interest. We know that there's stuff like precious metals, real estate, for example. That's always a good, if you do everything for the long term, I believe, with congruency and understanding, these are all good strategies. In cryptocurrency, we know that there was some miraculous runs of that. However, beware the kryptonite. I've seen some kryptonites out there 2 or 3 years ago that are now selling conservative strategies online. So beware the kryptonite because they keep changing like chameleons. You got to protect your money from kryptonite. But with that being said, cryptocurrency is here to stay. It's a real thing. Always do your due diligence and make sure you understand. In the overall financial mosaic, we're not giving a recommendation here. We're talking about the mindset on how to not only diversify within and amongst asset classes, but the questions you should ask. And yeah, we got stocks, bonds, cryptos, precious metals, and real estate as a way to put yourself in a position. Like Ray Dalio says, there's 18 different, he likes people to put their money into 18 different asset classes. And at any given point in time in history of an asset class, seemingly out of nowhere, at some point, at one time, they're going to go down 50 to 75%. So you never want all your money in the same basket. The best alternative is a unique and underappreciated alternative to a savings account. One of the things that we love to talk about, this isn't what we only do, it's what we do in the overall strategy, is overfunded cash value life insurance. Your premium payments grow the cash value inside the policy, which can withdraw from or draw loans against whenever you need the cash. Now, here's how that works. each year, as you're putting money into your policy, your cash value is growing, but more of your money is going into your cash value because of the cost of insurance is coming out of. That's a traditional whole life. Now, if you throw in what we like to call dump-ins, but not make it a MEC, meaning taxable, you can put money in immediately and have access to that as well. And the key here, if you want to talk about becoming your own bank, is that while the money's in the policy, if you were to leverage it out to buy other investments, real estate or anything else, fund your own business, finance your own debt, it's going to earn a rate of return in the policy. We talk about often. So when we look at overall strategic maneuvers of money, investing in the real estate between your ears, we love the insurance as a safe harbor or a safe place for that money to be stored so you can put it into other directions as you, the entrepreneur, wants to create your own wealth and get multiple use of each and every dollar. That's the whole key here. This is a much longer conversation. It's not just like, hey, yeah, become your own bank. It's a great video. Click the link here. So go ahead and click that link below, like, subscribe, share. Here's our guarantee. When you go through our process, either one call or through hello right up until the end, which is a 6-call, 60-day process, you don't have to say yes. And we do guarantee when you walk away, you'll be more educated. Anyway, thank you for checking us out. Look forward for the next video. And we're super grateful that you actually take time to listen to what we have to say.